Okay, let's dive right into it. Today, we're doing a highly focused explainer, a short, concise overview built specifically for you financial experts out there. We're zeroing in entirely on the Deutsche Bundesbank's payment systems landscape and those upcoming 2026 payment statistics reporting obligations. So if you're the one handling compliance, data architecture, or payment operations, well, this is exactly what you need to know. To respect your time, we're taking a fast, top-down approach. Our agenda covers 1. Fokus-Zahlungsverkehr der Bundesbank, 2. Zahlungsverkehrsstatistik-Grundlagen, 3. Veres-Meldeplikti, 4. E-Geld and Kontanzugriffe, 5. Transaktionsarten und Meldepliktige, and finally, 6. Rechtliche Basis und Ziele. Let's get to it. Section 1. Focus. Zahlungsverkehr der Bundesbank. First up, let's quickly contextualize exactly where payment systems fit within the Bundesbank's overarching mandate before we get into the compliance weeds. So the Bundesbank basically operates on a few core pillars. Now, monetary policy, financial supervision, and cash management, those are the ones that usually grab the headlines, right? But the payment systems division, that's the vital nervous system for financial data collection. This division doesn't just manage infrastructure like the SEPA or look into the digital euro. It is fundamentally responsible for gathering the incredibly detailed payment statistics that actually inform both national and European economic policy. Moving right along to Section 2. Die Zahlungsverkehrsstatistik-Grundlagen. Here we're looking at the structural hierarchy of the payment statistics themselves, specifically based on those updated January 2026 guidelines. When we review the foundational terminology straight from the source, it's pretty interesting how they clear up potential ambiguities right out of the gate. For statistical reporting purposes, the guidelines explicitly treat the terms transaction and payment transaction as perfectly synonymous with payment process. Getting this definitional baseline hard-coded into your IT architecture? Yeah, that is literally step 1 for 2026 readiness. Section 3. Wer ist meldepflichtig? This brings us to a massive operational question for your risk and compliance teams. Who, exactly, is on the hook to report all this data? Well, the reporting net is cast pretty wide. You absolutely have to ensure reporting alignment if your institution falls under the standard ECB categories, so credit institutions, e-money institutions, and payment institutions. But here's a really crucial takeaway for the German market. Transactions with promotional banks or further banken are fully subject to these requirements. They are considered non-payment service providers in the context of this survey, which means transactions with them absolutely must be captured and reported. No exceptions. So it really boils down to the principle of direct relationship. The entity that holds the direct connection to the non-payment service provider is generally the one responsible for the statistical reporting. Think of it like this. If you initiate the transfer for a client, you report it as sent. If you receive it for a client, you report it as received. Sounds simple enough, right? But mapping that straightforward logic across complex, multi-party payment chains, yeah, that's where the real compliance headache comes in. Let's move to Section 4. E-Geld and Kontanzugriffe. We need to see how this reporting logic actually applies to specific digital assets, particularly e-money and third-party account access. For e-money, the guidelines are very strict. They adhere right to the 2009 EU directive definition. It's basically any electronically or magnetically stored monetary value that represents a claim on the issuer. The big takeaway for you here is that the account holding entity has to report the absolute number of accounts where this e-money can actually be stored and used for payments. Now, here's a super specific, highly practical rule for any institution dealing with account information service providers, or AISPs. If an account is accessed by an AISP from just a single country, well, that's a simple report. But what if cross-border access happens from multiple countries via different AISPs? Compliance dictates that you don't fracture the reporting. Instead, you just report the single country that is executing the highest volume or the most frequent number of those queries. Honestly, that's a vital deduplication rule that your database architects need to know right now. All right, Section 5, Transaktionsarten und Meldepflichtige. Let's put your operational readiness to the test with a rapid-fire breakdown of specific transaction types and who exactly has to report them. This is where the rubber really meets the road. So, first up, when we're talking about card-induced direct debits, the classic ELV in Germany, and mobile point-of-sale payments, who actually carries the reporting burden? Well, the burden is split. The card issuer reports all these sent transactions, and the acquirer handles reporting the received ones. But
As experts, you've really got to watch out for the Treuhandmodell or the trust model exception. This is particularly relevant for the Girocard network. In this highly specific model, it's actually the network operator who takes over the reporting obligation, not the merchant's bank. Okay, what about something standard, like everyday cash withdrawals? Thankfully, this one is super straightforward. The card issuer alone is completely responsible for reporting cash withdrawals. Nice and easy.
Now, you really have to actively differentiate between internal own account transfers, say a user moving money from their checking to their savings account within your banking app, and transfers initiated by a PISP. Those internal transfers actually fall under a specific PSD2 exception and usually just result in a zero report. But for PISP transactions, the payment initiation service provider themselves or the account holding institution acting as one must report the data depending entirely on the flow direction.
Okay, this next part is perhaps one of the absolute biggest technical hurdles for legacy systems. The rules surrounding the loading of e-money, like topping up a Geldkarte at an ATM, are intense. Unlike buying a prepaid mobile top-up at a grocery store checkout, the acquirer must sum up all load and unload transactions absolutely. The source is crystal clear here. No netting of load and unload transactions is allowed. Every single movement has to be captured as an absolute value. Finally, we're at Section 6, Rechtliche Basis und Ziele. Let's zoom back out for a second to understand the regulatory foundation and the actual goals driving these incredibly strict unnetted data requirements. The regulatory evolution here has been relentless. It started with the foundational 2013 ECB rules, expanded drastically with PSD2 in 2015, saw major amendments in 2020, had its very first reporting wave in 2022, and is now culminating in this highly detailed 2026 framework we've just been walking through. It's a massive signal that the regulatory appetite for granular payment data, it is only increasing. So why do they actually want all this data? Well, the Bundesbank isn't just collecting this for some abstract monetary policy exercise. This data directly feeds BaFin's fraud monitoring systems under the Payment Services Supervision Act. It literally shapes real-time macroeconomic trend analysis, improves balance of payment statistics, and fundamentally ensures the smooth operation of European clearing systems. Basically, your compliance data is the fuel for European financial stability. Operationally speaking, there are no manual workarounds anymore. Your technical and compliance teams must ensure all of the structured data is routed securely and electronically directly through the Bundesbank ExtraNet. And of course, you have to adhere strictly to their prescribed XML and CSV reporting schemas. As we wrap up this overview, I really want to leave you with a critical thought to take back to your teams. Are your systems truly ready for the sheer precision required by 2026? Can your databases seamlessly handle unnetted absolute summations and cross-border query deduplications? Or is it time for a comprehensive compliance infrastructure audit before these new reporting deadlines hit? Thank you so much for joining this expert explainer. And hey, good luck with your 2026 preparations.